Good day, ladies and gentlemen. Welcome to my channel. Indecisive price action in gold over the passing week led to a breakdown of the major rising trend line. Today is February 7th, 2021, and I'm going to cover gold, silver, and precious metal miners. Let's start with gold. This is a daily chart. On a weekly basis, gold lost 1.6%, closing at $1,814. On February 4th, gold broke down the major rising trend line and fell as low as $1,785. However, investors stepped in to bid up the gold price, pushing it back above $1,800 level. Yet, gold continued to remain under the major support line, which will now act as a resistance. However, in my opinion, this is a false breakdown, and here is why. Let's zoom in. As you remember, gold had struggled to overcome the upper band of the flagship formation nearly for 4 months, but managed to break it only on December 16, 2020. After a breakout, markets tend to advance higher and then pull back to retest the former resistance, which then should act as a support. In fact, gold retested its previous resistance for 3 times, with the last one on February 4th. Gold holding at retest once again is a very constructive price action. Secondly, prior to any major price action, markets tend to make a counter-directional move to shake out as many investors as possible. The breakdown of a 1.5-year trend line should have resulted in a much deeper and intense sell-off. Yet we witnessed a very contained decline. This makes me to believe that gold is trying to shake out investors. Finally, as gold lost 1.6%, gold miners, GDX, added 0.3% on a weekly basis. GDX should have been 3 to 5% lower, but we didn't witness that. Gold miners do not believe in further downside in gold. Therefore, all these factors together suggest that gold will most likely grind higher over the coming weeks, and I would like to see gold back above the major rising trend line. For the next week, support for gold comes above 1780, 1790, resistance at $1,850, $1,855 level. Let's have a quick look at the silver. On a weekly basis, silver lost 0.7%, closing at $26.82. Intra-week, silver rose as high as $30, eclipsing its previous high, but couldn't sustain gains and sold off sharply under $26. As expected, silver couldn't expect advance above $30 at present time, given the significant resistance at this level. Interestingly, as gold cleared its previous low, silver didn't and held much better. It looks like that silver is trying to form a base around $26, $27 level. And I expect silver to slowly grind higher over the coming weeks and months. Silver miners, SIL, added 0.4% despite silver losing 0.7% on a weekly basis. Intra-week, SIL demonstrated extreme volatility, giving double-digit movements percentage-wise in both directions. Overall, SIL is continuing to trade just under the upper band of the flagship formation. The number of hits and breakout attempts is getting very congested, and I wouldn't be surprised if SIL legitimately breaks out from the flagship formation already in February. This is it for today. Please note that this video is not an investment advice and prepared solely for educational purposes. Wishing you a nice weekend.